What's going on, guys? Welcome back to the channel. In this video, we're talking about bond yields rising, which affects fixed mortgage rates. So fixed mortgage rates starting to possibly head up here. Definitely a hot topic in the market. I want to go over it in terms of what's causing it, what this means for mortgages, what this means for the rest of the year, and what we're looking at right now. So let's chat about how specifically this affects the mortgage market. So here's the deal. Canadian bond yields have suddenly jumped up, and I'll post a chart right here for you to look at. Now, I know bond yields are kind of like, they sound like a boring financial thing, but stick with me. It's actually an important thing. These yields are like the backbone of the fixed mortgage market. And after a period of decline, they've shot up about 0.30, right, in a really short period of time. That's a pretty big leap, okay? What does this mean for mortgages? Now, if you've been keeping an eye on the mortgage rates, hoping that they'd keep dropping, I've got not such great news for you, okay? Those nice rate drops that we've been seeing, well, they're likely to hit a pause button for a while. In fact, don't be surprised if they actually start to creep up a little bit again. Not what we all wanted to hear, but that's kind of the reality of the situation. So why is this happening right now? Why are bond yields rising? Why are fixed rates potentially going to be going higher now? Well, here's a few reasons. Inflation is being stubborn. It's not coming down as quickly as everyone hoped. This makes lenders a little bit nervous about offering lower rates. Number two, US politics are stirring the pot a bit. So there's a lot of political events kind of changing that and making people feel that if Trump wins, that could affect US treasuries and stuff. But just know that also the US election stuff is kind of making people a little bit jittery. And when investors get nervous, it can affect our mortgage market too. Okay. And then three, we got the Fed is holding steady. So this is obviously the Federal Reserve in the US. Think a bit like Bank of Canada's cousin. They said they're not ready to lower interest rates yet. This has a ripple effect on our market directly. It causes our bond yields to rise. Now, if you're one of the people that has a variable rate mortgage, you might be wondering what this means for you. Well, it looks like we might have to wait a little bit longer for some relief or some more relief. Bank of Canada probably won't be cutting rates as soon as we all thought and hoped that they would. So it's maybe a little bit of a pause here on the rate cuts. And looking ahead, what needs to happen before rates drop again? According to experts, they need to see inflation come down, okay? And I mean really come down, not just come down and go up and go sideways, but really inflation needs to drop, okay? And they're keeping a close eye on unemployment numbers. These are two factors that play a huge role in how the Bank of Canada makes its decision. So if unemployment starts really going up, meaning people start losing jobs, that's a real sign of like heavy recession. We're in it. It's bad. So this is what information we're looking at right now. And so some good news, right? Not all doom and gloom. I don't want you to feel terrible, right? There is a silver lining. The overall trend for mortgage rates is still expected to go down eventually. And it's just not going to be a smooth, straight line down. It's not going to be this perfect, drop and descent, right? Got to think about it like more of a bumpy roller coaster down, okay? There's going to be some bumps along the way. It's just the reality of the situation, the reality of the way the bond yields work, the way fixed mortgage rates work. And all of this stuff is getting priced in real time with all these things happening in the world, like the election in the US with, these debates, stuff like this, with these inflation announcements. All this stuff is getting priced in right away into bond yields. So here's some advice if you're mortgage shopping right now. If you're in the market for a mortgage, this is my advice. Number one, don't panic. Okay, remember these changes are part of the normal ebb and flow of the market. Number two, stay informed. Okay, keep an eye on the news and trusted financial sources. Number three, talk to an expert. If you want to reach out to me, my information will be down below for you to reach out via phone, email, call, text, whatever is best for you. A good mortgage broker can really help you navigate this choppy time, right? And find the best deal for your situation. And you also want to consider your options. You want to look at fixed versus variable, different terms in terms of 3, 4, 5-year terms. There's no one size fits all. Everyone's different depending on your financial situation, what you're looking to do. If you're looking to refinance, renew, whatever you're doing, it all depends and it takes a broker to really look at your situation. And if you'd like me to kind of do that, of course I can. So bond yields are starting to rise a bit just because of all that uncertainty with what's happening. It's really a mixed bag. So if you want to stay tuned for all these updates on the real estate market and mortgages, please subscribe. And I know it's confusing sometimes with all this information. It's pretty head turning. My brain kind of needs a break from all this stuff at times, but we're all in this together, right? And it's good to keep learning, stay patient. Remember that in the long run, rates are still expected to come down. And so don't panic right now. If you are renewing at the end of this year or next year, don't start having like a hernia right now. Things should be fine, right? And, that's kind of my job, is to really find the best scenario for my clients and make their situations as best as possible. Okay, so appreciate you guys watching the video. Again, if you can like and subscribe, really helps me out, helps me push this kind of content to new viewers who might be interested in it. And of course, subscribe for more videos. And if you have any questions, you want to go over anything in terms of mortgages, financing, any questions about real estate, please feel free to reach out to me. All my information will be down below. And until the next video, guys, take care.